Hey everyone, welcome back to Upside Down Data. Today I want to talk about a potential headwind for Bitcoin in the longer term. I don't think a lot of people are really talking about, or at least they don't talk about potentially enough. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there. So with Bitcoin, obviously when you look at its price history over its life, that's what I'm showing you here, the whole price history. There's nothing to really complain about for anyone who was, an early investor, right? Bitcoin has been, possibly the best performing asset, certainly in the last 10 years. It is, one of the best performing assets that's out there, if not the best in a lot of cases. But the one thing that, given how good it performed, how well it performed, more recently, there were some people who have been disappointed. There's some people who thought that Bitcoin was going to go a lot higher. They were looking at things like the stock to flow model, for example, which said that, on average, Bitcoin should be averaging at around 100K throughout this entire epoch until the next halving. And so far, it's fallen well off pace for that to really be a possibility, dipping below the kind of fair value line on the stock to flow model to a greater degree than it's ever done in the past. Now, obviously, when people look at this, there are a lot of explanations that are given, and I'm not disagreeing with any of them, right? That this was a dubiously fit model, that the way that this original model was fit was quite questionable, that gave unrealistic expectations at this point in the future. That's certainly one concern that's raised that I think is a very valid criticism. I agree with that. And then also the case that can be made, separate from that macro conditions intervened. Maybe Bitcoin was going to go and, kind of fulfill this destiny, but then macro environment prevented that. That's another argument that could be made. And I think that's also, at least to some degree, true that, I think if macro conditions hadn't soured so horribly, Bitcoin could have gone higher. But there's another headwind that Bitcoin's facing that I think also matters here that you don't hear talked about as much for why maybe Bitcoin hasn't hit some of these high target levels that were built or kind of established based on some of these models or just other people's projections. And that has to do with competition. So here is Bitcoin's market cap. So I just want to start with this. Look at where we are currently right now. It's at a little bit under 400 billion, but it was up to around 1.3 trillion back in November when the all-time high happened. And back at that point, the crypto market cap overall actually reached a high of a little over $3 trillion, or at least according to the data here on TradingView. Now, what you'll notice about that, right, is that Bitcoin still the biggest player in the space for sure, 1.3 trillion, but that's not 3 trillion, right? Its dominance or its proportion of the market is low, and it's actually been falling for quite a while. If we look at the market cap of the crypto space minus Bitcoin, we can also see this, where it peaked out at almost 1.6 trillion, which was actually greater than Bitcoin's total market cap. And what that means is there's an awful lot of money that was flowing into the crypto space during this run that wasn't flowing into Bitcoin. I mean, even frankly, if you move back, there was money flowing in back here, but really a ton of money flowed in to the crypto space to assets other than Bitcoin during this time. And what that means is that Bitcoin itself was not benefiting from that liquidity. It was not increasing in price based on all of this, this 1.6 trillion market cap. All the money that flowed in to push the market cap of alts up to those levels was not something that would be benefiting Bitcoin's price. And so if we're going to ask the question of, what maybe put Bitcoin off the trajectory that some people expected to be on, all those other factors apply, but maybe it's also a narrative here that Bitcoin is engaging in a space, the Web3 space, that's becoming more and more crowded with more and more serious competition than it had. Back in the early days of Bitcoin, if you go all the way back to these days, Bitcoin was the only game in town. If you wanted to be in crypto, you were in Bitcoin. There wasn't really any other option, or at least any other option that people really cared about. But now we're in a very different space over here. We've got tons of other different crypto assets, obviously Ethereum there, but then also, just all the other ones, the alt layer ones, gaming tokens, DeFi tokens, metaverse tokens now becoming more of a thing, etc. There's a huge variety of different assets in the crypto space that aren't Bitcoin, and that creates competition. And I think a way of kind of understanding kind of that the effect that this might have in the most extreme sense is to kind of look at a counterfactual. This is something that I did just kind of out of interest, out of curiosity, as an exercise. And so I'm going to show a couple of graphs that I put together here. So this is just the Bitcoin price just during the whole time that we have market cap data on it from TradingView here. That's what I'm visualizing right here. And what I want to think about as a hypothetical is, let's say that we were in an environment where crypto was literally just Bitcoin. So let's imagine this is an environment where, you know, no altcoins were ever developed. So there's no Litecoin, no XRP, no Ethereum, etc., nothing. It was just Bitcoin this whole time. And let's imagine that the same amount of liquidity dropped into Bitcoin then as it did the whole crypto space. Or let's just say, in other words, let's imagine that Bitcoin's total market cap was equal to the total market cap that we actually observed across the whole crypto space. So, you know, Bitcoin encompassed the entire market cap of crypto through these moves we saw. What would Bitcoin's price have been had that happened? If it had no competition and then the same amount of liquidity had floated into the space, where would its price have been in this most recent bull run, for example, relative to where it actually went? Well, we can see that right here. So the yellow line is this adjusted price. So I'm calling this the total dominance price. This is imagining if all the money in crypto had flowed into Bitcoin instead of being diffused across different assets. Or in other words, if Bitcoin had dominated the entire crypto market cap throughout this whole time. What you can see is that it would have absolutely gone to way higher valuations than it did. And you'll actually notice that at its peak, in November of 21, it actually would have been a little over $150,000 per Bitcoin. It would have been about 153,000 is what the number would be if it had encompassed all the liquidity coming into the crypto space, if it had no competition. And in fact, right now, it would be trading at a little under 50K in the 45K range, you know, double the price that we're at right now if it still encompassed that much of the market share. Now, obviously, this counterfactual is a little bit questionable in a lot of ways because, you know, if Bitcoin is the only game in town, would crypto have ever gotten as big as it did throughout this whole thing? You know, I think there's an argument that could be made that, you know, excitement around, you know, Ethereum, DeFi that was built on Ethereum, and then all of the layer L1s kind of in this move here, and, you know, metaverse and all that kind of stuff brought in a lot of liquidity that wouldn't have necessarily come into the space otherwise. Or you could even argue that, you know, Dogecoin to some degree or SHIB in this move also brought in, you know, speculative money that maybe wouldn't have flowed in, or retail money that wouldn't have flowed in necessarily to just Bitcoin. But regardless, I think the point is clear. The idea is that the more competition that Bitcoin has, the harder it's going to be for its price to continue kind of moving up in as parabolic of a way. It's one of the things that would feed into this idea of diminishing returns. Because diminishing returns, you know, it's going to factor in the larger that the market cap is for Bitcoin, because just the more money was required to move price into it. But the other reason why we're probably going to see diminishing returns with Bitcoin is it's not the only game in town. There's competition now, and there's quite a bit of it. And frankly, I don't think that's going to change anytime soon. I actually think it's just going to accelerate as we go on from here. You know, as Web3 accelerates and as it kind of gains more adoption or more use cases, more utility, all that kind of thing, there's just going to be more and more competition for Bitcoin. And so when we're making our projections of where Bitcoin's price could be in the future, we have to keep that in mind. We have to keep in mind the context in which it's going to be operating. And it's not going to be this case that Bitcoin's going to be the lone wolf. And in fact, you know, it's probably going to be the case that Bitcoin's dominance over time, at least in my opinion, not in the short term, but in the long run, is probably going to be in a downtrend, more extended. Because again, if we expect crypto to become this kind of big asset class, something that really starts to disrupt traditional finance or things like that, you're kind of necessarily, you know, unless you're a Bitcoin maximalist who thinks that, you know, all coins are garbage and they'll all fail and that only Bitcoin will survive. If you're someone who just thinks that Web3 in general is gonna succeed, then I think it's quite reasonable to expect that there's going to be more and more competition for liquidity that could draw it away from Bitcoin. Now, I don't think that's an unreasonable thing to expect going into the future. And so that's one thing that acts as a bit of a headwind, not necessarily of Bitcoin being able to appreciate in time. You know, I'm not saying that Bitcoin's not going to be able to trend up with time. I think absolutely, I personally think it probably will trend up with time. You know, even as bearish as things feel right now, you know, I think, you know, given enough time, Bitcoin is going to setting new all-time highs again. But when it does that, I also think that its upside potential is going to be limited based on the fact that it has all this competition for liquidity. Versus if it didn't. If it didn't have all that competition, you know, we can see right now it would have done a whole lot better. You know, with this counterfactual, if you assume it would have, that the same amount of liquidity would have flown into the space. And so, you know, this is one thing that separates crypto from some other, you know, asset classes that sometimes gets compared to. You know, people compare Bitcoin to gold a lot, for example, calling it digital gold. One of the differences, one of the very clear differences, is that with gold, its competition is incredibly limited. You know, there are only so many precious metals that are out there. And it's not like you can just invent a new precious metal every other day and throw it out onto the market. It doesn't work that way. You know, it's physically limited to just a certain number of competitors. And so there's kind of, you know, for its fundamental function of being this kind of store of value, it has a bit of a moat there, that there just isn't going to be a ton of competition that could show up to try to take liquidity away from it. Bitcoin and crypto is not like that at all. There's tons of competition, and in fact, you know, cryptos are a dime a dozen, you know, literally right now in this bear market. They're a dime a dozen, and anyone can just make a new crypto asset whenever they want and throw it out there onto the market. So the moat for Bitcoin is not anything about other assets not being able to ever do literally the same thing or have the exact same fundamental value. Really, Bitcoin's kind of moat is the fact that it's the biggest, it's trusted the most by most people, has kind of a big network effect. That's kind of its moat and why it's growing here. But over time, as Web3 develops, as it matures, and as more utility comes into the space from the technology, there's probably going to be other use cases for crypto that are going to start sucking a lot of liquidity into them. And that might come, at least partially, at the expense of liquidity that could have gone into Bitcoin. So obviously, the other argument you can make, though, you know, it's not to say that's all bad, because, you know, you could also say that a rising tide lifts all boats, that if the rest of Web3 becomes really massive, gets a ton of adoption, generates a lot of value, that should also lift Bitcoin up along with it. I think that's totally reasonable. But it's still certainly the case that there's going to be in that kind of competitive environment. And I still think that my base case would be that, you know, Bitcoin is certainly going to do worse off in that environment than if it was the only game in town. You know, assuming that people would care about crypto if Bitcoin was the only game in town. So I just wanted to make this video quickly just to mention this, because this is something that, you know, other than Bitcoin maximalists who will just, you know, talk about altcoins being garbage, but, you know, obviously have to take things, what they say with a grain of salt, because they're very much biased pro-Bitcoin. I don't really see a lot of people talking about this aspect of Bitcoin's price and why it might not have reached the kind of prices that people expected back in the 2020-2021 bull run. Because in fact, we can see from this chart right here that if Bitcoin had sucked up, you know, the entire market cap, or even if just sucked up a larger percentage than it did, it probably would have hit those 100K price level targets. You know, it probably would have been up at those levels. We didn't see that. And so it's something to keep an eye on moving forward. Keep an eye, in my opinion, it's going to be important to keep an eye on the competition and how much liquidity is being sucked away from Bitcoin to then determine what is a realistic price that we think Bitcoin could accomplish in the future. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates, better indicators, and more over there.